I'm pretty sure if you find yourself in a formal work setting, you might have heard about the tier 1, tier 2, tier 3, and sometimes you even wonder what it is. Boom! Hello managers, welcome to another episode on the management desk. This is the educational segment, and today we're going to learn something about the 3-tier pension schemes we have in Ghana. So if you're ready, let's get started. So just to give you a little background about how the 3-tier pension scheme came into being, we already had one that was a SSNIT, which was running, and then the government, being thoughtful, they realized that the SSNIT was not even enough for the pensioners when they retire. So just to augment or supplement the already existing SSNIT scheme, they decided to come up with 2 additional schemes. That's a tier 2 and a tier 3. And today, to make our sessions more interesting and for you to also be able to follow through, when I pick the scheme, I talk about the features, the benefits, and then I'll finally conclude with any other thing you should also know about the scheme. The first tier scheme is also the SSNIT, and one thing about it is that it's mandatory for every employer to pay. Basically, is a total of 13.5% of your basic salary, and in this case, it's more like a contributory. So your employer pays part and you also pay part as well. So the employer pays 13%, and then you also match it with the 0.5% to get the total 13.5%. Apart from that, it's entirely managed by the government institution called SSNIT in Ghana. Great. And the next thing you also have to be aware of about this scheme is that usually the deductions or the contributions are supposed to be remitted to SSNIT by the 14th of the subsequent month after deduction. So if you have to make the deduction somewhere, let's say in August, by 14th of September, the amount should have already gotten to the trust. Otherwise, it comes with a penalty for non-compliance. Now, another thing you also need to know about the SSNIT scheme is that both the employer and employee have to register with the trust. So as an employer, when you register with SSNIT, they give you the company registration, or they call it the employer registration number. And then as an individual, if you also register on employee, you get your SSNIT number accordingly. But mind you, as an employee, you only get to register once. You don't have to re-register again. Once you register, that is it. So you can always use your SSNIT number regardless of the firm or the company you move to. Now, to the benefit of SSNIT, the first one, which is the obvious benefit, is the fact that when you're going on retirement, you get something to go home with, either paid in lump sum, or sometimes they also spread it over a period of time. And the second benefit you also get is the fact that that amount that is usually deducted, that's the 13.5% of your base pay, is tax deductible in the sense that you don't pay tax on that 13.5% of your income. So that's a gain to the employee, because if it's to be added, you're going to pay more tax than you are already paying. Alright, so talking about the second tier, which is also known as the Occupational Pension Scheme, it's also mandatory for every employer to pay. But unlike the SSNIT or the tier 1, which is managed entirely by the government, this is also managed by private pension service providers at the election of your employer. So your employer decides, or they look around, find a reputable institution to manage that kind of funds for them. And again, what you have to also understand about the second tier is the fact that this time around the employer doesn't pay part or doesn't match your contribution. This is solely the contribution of the employee, and it's 5% of your basic salary. Alright, so another thing you need to know about the second tier scheme is the fact that it is managed by approved trustees. And here, when we talk about approved trustees, we are talking about individuals or institutions who have been approved by the National Pensions Regulatory Authority in Ghana to manage investments on behalf of its members. You realize that although the assets or the investment are held in the name of the trustees, they are just the property, or they are entirely for the members. So in managing the tier 2 scheme, the approved trustees are by law mandated to have custodians, and they are supposed to also have fund managers. So the custodians are basically the individuals or the institutions that hold the cash, or the contributions rest with the custodians. So they more like keep it safe for the members. And then the fund managers also have a duty to ensure that the fund is actually performing, or the scheme is performing, by looking out for investments that are doing well, doing analysis, trying to make sure that the scheme has an investment mix that is more profitable for the members. Now, in general, the tier 2 scheme cannot be accessed before retirement. That's something you also need to take note of, because until you get to 60, that is the required retirement age in Ghana, or 55, that's for early retirement, you cannot access your tier 2. So what it means is that even if you are changing employers, you cannot have access to your cash, or it will not be paid to you, but you only have to transfer to your next employer, because until you get to that age of 55 or 60, or until something happens that makes you incapable of working again. So if it's a serious medical condition, if it's some sort of accident or anything that renders you incapable of working again, you cannot access your tier 2. Now, to the benefit of the tier 2 scheme, the first one, obviously, just like the tier 1 scheme or the SSNIT scheme, you get a lump sum when you are going on retirement, and then it's also tax deductible, as I explained. And there is another importance or benefit of having this tier 2 scheme, is the fact that the law allows you to use it as a deposit for a mortgage facility, so you can also be a homeowner. I think that's good news. So if you didn't know that, that is one thing that you can also use your tier 2 for. Unlike the tier 1 and tier 2 pension schemes, which are mandatory, the tier 3 scheme is actually voluntary, and it means that your employer can decide to do it or not, and you cannot take the employer on. But then, similar to the tier 1, it's also a contributory scheme where the employer contributes, the employee also contributes, and that is what makes up for the scheme. But under this scheme too, there's this provision where you can go as high as about 16.5%. I'm talking about the 2 contributions. That's the employer can decide that, okay, well, I'm doing 5%, you do, let's say, 10%, but you can do even more than the 16.5%, just that the law only provides tax relief for up to 16.5% of the employee's basic salary. So in the event that you decide that, okay, you're going to really do 20%, that is with the 2 contributions combined, then you should know that you only get tax relief or tax savings on the 16.5%, with the remaining 3.5% being subject to tax. And just like the tier 2, the tier 3 is also privately managed by private pension service providers, and also managed by approved trustees, and they have to be licensed by the National Pensions Regulatory Authority. Another thing you also need to note about the tier 3 pension scheme is that, unlike the tier 1 and tier 2, or the SSNIT and the tier 2 that cannot be assessed until maybe you are retiring or you have this critical medical condition that render you incapable of working, the tier 3 scheme can be assessed before retirement. And usually, if you assess it before the contribution is 10 years, it is subject to tax. And then that is for those in the formal sector. And for those in the informal sector, you can also enroll on the scheme, just that if you want to access it before retirement and enjoy tax savings, then you have to wait till 5 years. But anything before the 5 years will come at the appropriate tax rate. So now, to the benefit of the scheme, just like the 2 other schemes that we've already spoken about, this scheme has tax savings, as we've already seen. And then the other bit is you get a lump sum upon retirement. And again, just like the tier 2, you can use it as a deposit for a mortgage facility, so that you can also become a homeowner. That is a good news. So you could see that it's very beneficial to get these 2 schemes. If the employer can, the tier 3 scheme will be a very good scheme to be enrolled on. Alright guys, now to the general information about the scheme. The first one is that with the tier 2 and tier 3 schemes, there's some payment or some charges that come along with the managing of these schemes. So the NPRA, that's the regulator, takes a percentage, and then the fund managers, the custodians, as well as the trustees as well. So you realize that even though you'll be earning more interest on your tier 2 and tier 3 as compared to the tier 1 or the SSNIT, it also comes at a cost. But usually, if you do the math, you realize that the net benefit of getting this tier 2 and tier 3 is far outweighs what you actually get on your tier 1. Now the second thing is that the tier 2 and tier 3 schemes, just like the SSNIT will usually send you a statement at the end of the month. But for the 2 different schemes, that's the tier 2 and tier 3, You're going to get a statement on a quarterly basis on how well your investments are faring, and how you have a membership statement that has your contributions and the interest that have been accrued into your account so far. And the final thing I'd like to talk about is the fact that the Tier 2 and Tier 3 schemes must also be subject to annual financial statement audit to ensure that they are compliant with the rules and regulations, and also to make sure that the investments are actually being managed well in the best interest of all the members and their estates thereof. I hope you find today's video useful. Make sure you hit on that subscribe button if you haven't done so yet, and turn on the notification. Make sure you also hit that like button because it helps the channel a lot. And most importantly, make sure you share to all your contacts. Like I always say, you may never know who it will help out there. Thank you so much for watching. See you in my next video.